Okay. So just so that you all know, because I know you expect this, but we are not only recording this on Zoom, but it's also live on YouTube as well, so that people can watch us if they choose to do so. And I don't think that anybody does, but so just so you know. Anyway,
did
so
you turn off the comments though?
now people really get just all worked up about this stuff. They should, if they understood how important the money in the county is, they should really care. But they take for granted that the commissioners got it all under control. So anyway, today we have a couple of things we want to address. But first of all, I would like to introduce Bill Sweat. He has been on the committee for a couple of months, but our timing has not been great. Bill has 25 years at Fidelity Investments, and he's also the owner of Winderley Wine in Dundee. So he brings a lot of background, skill, community involvement, and I really appreciate the fact that Bill has agreed to join us on this committee. And I know that he, like many other people here, have very busy schedules. And so to take a time out in his day, even though it doesn't seem like a lot of time, is a big commitment. So thank you, Bill. I appreciate your joining the committee. We also have today, as I mentioned earlier, we have as a guest, we have Alec Ward, who is an account executive public funds market at Clearwater. And he's the guy with all the answers when it comes to explaining how the Clearwater system works. And so we're happy he came in on vacation. Where are you, Alec?
I'm down in Mexico.
Oh, in New Mexico or?
Mexico.
Mexico. Oh, wow. So we have a national guest. So thank you.
Yeah.
Thank you, Alec, for being here.
Yeah, of course. Glad to be here. Excited.
Yeah. I'm sure that Jim's in Mexico too. So, I mean, doesn't it look like it behind him?
With the oranges? Yeah.
Yeah. Yeah, Jim, you probably need some art in your office. I have a lot of it. So if you want some of mine, I'll gladly lend it to you.
We're working on it.
Okay. Yeah. So the other thing I wanted to acknowledge is that both Katie and Jim have agreed to be on the committee for another term, and we appreciate that. And I don't think there's any limits, so I expect you to be on this committee for life. I guess you didn't realize that, all of you, when you signed up. This is a lifetime.
Like the Supreme Court.
Yeah, exactly. Yeah. So the first thing we have up is, there's Kevin. Kevin has a baby, so we'll cut him some slack. Morning, Kevin. Well, morning, Kevin.
Hi there. Sorry, I'm a few minutes late.
That's okay. That's all right. We were just doing introductions. So the first thing, did you all get an opportunity to read the minutes? And do I have anyone have a motion to approve the minutes as written?
I'll make a motion to approve.
Thank you. Thank you, Stacy. And a second?
Second.
Okay, thank you. Thank you. All agree?
Hi.
Okay, great. Thank you. So now we're moving on to Stacy has agreed to give us an overview of what she sees in trends in the market, which is not an easy task right now. And I will have to say that, and maybe this will be part of Stacy's presentation, but inflation was announced today that it is now 7% for last month. So it has gone up again this month. So with that, okay. So Stacy,
Great.
for it. Do you want?
All right. Thank you, everyone, and Happy New Year. I'm going to attempt to share a few slides. So hopefully host disabled participant screen sharing. Okay.
No, I can do that. I can do that. Okay. Because I am the host, right? So I should be able to do that.
Okay. Let me know. And if it doesn't work, I can certainly talk through it. But I think with some of the trends going on now, it might be helpful to see some data points.
Does anybody know how I share the screen? I know you all use this.
I would just make Stacy the co-host. That's the easiest way to do it.
Oh, okay.
If you trust her, and I think you do.
I do. I trust her a lot. So, well, now
Oh, Chris, that's okay. I know we've got a lot to get through, and I don't want to hold us up here. So I can just talk through a few of the points, and then I could send the slides out afterwards if you'd like.
okay. I'm gonna. Okay, you are now the co-host,
Oh, okay.
so you should be able to share. Is that right, Casey?
Oh, it worked. Okay, great.
Okay.
Thank you.
Thanks, Casey.
So let me go back up to the first page here. Okay, so I'm going to keep my comments brief just in the interest of time, but happy to answer any questions. The first slide I wanted to throw up here just shows what the total return for 2021 looked like across a number of different asset classes. I know obviously the county's assets are invested in fixed income exclusively. But you can see that if you're familiar at all with some of these equity indices, it was a very strong year for equity market performance. Whereas with fixed income performance, it was a little bit more mixed. And one of the headwinds that we had last year in 2021 was rising interest rates. I'm going to talk about inflation quite a bit and rising rates and how that might impact the Yamhill County portfolio. I think the good news is that over the short term, you might see a little bit of price movement to the negative in the portfolio in certain areas if we do have rising rates. But the portfolio that you have is very short duration, and meaning the maturity is fairly short. And so over the long term, rising rates will enable the county to earn a little bit more yield. As Chris noted, inflation has been rising dramatically. This was inflation for 2021, which is one of the highest readings that we've had since the 70s and early 80s. For those of us who remember that time period, just over 6, and again, came in today at 7. So inflation is a big part of what we're focusing on as we look at portfolios for clients. And I think what this committee should at least keep its eye on as well. Why is inflation going up so dramatically? There's a number of factors that I've listed here on this slide. I'm going to touch on each of them briefly. I think it's important to note that some we would consider more transitory and will likely abate over time. Others might be a little stickier. So the ultimate level of where inflation ends up being is a really important consideration and something for us all to keep our eyes on. I note here again with it, I'll go through a couple of these slides pretty quickly in terms of what's driving inflation. The first one here, government stimulus and increase in money supply. This chart here on page 6 shows kind of starting at a base level, at a neutral level in percentage terms, how much has the money supply, meaning the money that's out there for folks to spend, how much that's gone up. And in the coronavirus crisis, it's almost gone up about 50%, quite a bit more than what we saw similarly in the GFC. And that's been a combination of stimulus from both monetary, easing, and also from fiscal stimulus. And so it's put more money in people's pockets, and that's been good. It's helped some families survive the coronavirus, but it's also meant that consumers have had more money to spend. And when people have more money to spend, then that can certainly support inflation rates. Where have they been spending their money? They've been spending their money on goods versus services, because with coronavirus, we haven't been able to travel as much or go to restaurants. So you see this chart here, how the spending in goods has really spiked up during the coronavirus period. And related to that, on this next page here, this blue line shows how you've seen a corresponding increase in the price level of goods versus services, which has stayed pretty flat. So this is one of those things that over time, I think we could see this this abate a bit. This may be more of that transitory category of inflation, where the services become more balanced within the spending profile, and that demand supply imbalance that we're seeing will rectify itself. But that has certainly been a big cause of inflation over the last year. Few other points on inflation. Energy prices, we know when we go fill up, it's painful. We've seen a real supply demand imbalance in fossil fuels, where we've seen the supply, which is the energy use here, this gold line, has stayed pretty consistent. There was a small dip with COVID, but not extreme, whereas the capital spending and the drilling has gone down. People may have varying views on this, but I just think from a cost perspective, supply and demand, we're seeing the pain points with the cost of energy currently, and that's contributing to inflation. And then the last point I'd like to discuss on inflation is the labor shortages and the rising wages that we're seeing. And that's, again, positive in some cases for families, for our economic growth as a county, to have more of our families earning more money. But also wage inflation can tend to be a bit stickier in terms of keeping that inflation rate higher. Why are we seeing these rising wages? There's a lot of change in the labor market. And those of you who own businesses, I'm sure you're seeing that. Retirees are increasing. It's harder for working parents to get work given childcare issues with COVID. There has been a lot of people leaving their jobs, particularly in sectors with lower pay, restaurant workers, et cetera. COVID still is weighing on it. We have had some departures from jobs due to vaccine mandates, and we are seeing lower levels of immigrant work coming into the country because of COVID. So all of these factors are contributing to lower levels of people in the labor market, which is causing these shortages of folks to work, and a lot of businesses wanting to increase wages to attract workers. So given all of those comments on inflation, the firm that I work for, NEPC, our view is that we will see higher levels of inflation over the next couple of years. Over the long term, we do think, but 10 years or so, it will be moderated down to that 2.5–3% level, but we could see 5% or so stick around for a couple of years. And because of this higher levels of inflation, we're going to be moving into a period this year where we're going to start to see the Federal Reserve be much more aggressive in terms of raising interest rates than they have been, and also to taking other measures to lessen that money supply that we've seen. And so, one of the things that the Federal Reserve is doing, and I don't want to get too technical, but the first step in this process is they've been buying bonds. And when the Federal Reserve buys bonds, that helps infuse liquidity into the market, gives more money, increases that money supply. They're going to stop doing that, and they will stop it gradually over the next couple months. So by March, they are not going to be active participants in the bond market. That is one phase of their tightening. And then after that, we anticipate that they're going to start raising rates. And raising rates, what they released in the Federal Reserve December minutes, is that probably somewhere in the neighborhood of 3 to 4 25 basis point rate hikes in 2022. And so what that means is they raise those rates, the market adjusts, and the rates that you can earn on fixed income goes up. That is a positive for bonds over the long term for bond investors because you'll be able to earn more interest rate or more interest on your bonds. It is a negative in the short term because you will see some price movements to the negative when you see interest rates go up. Now, I want to stress for this group, because you tend to hold your bonds to par, is my understanding for the most part, those price movements, you will still get your money back at the maturity of the bond. So price fluctuations that you may see in your quarterly statements as interest rates go up is not a huge concern, but it is something just to note that rising interest rates does tend to be a headwind in the short term for fixed income. And then for equity markets and just for the economy in general, if we get in a situation where inflation is more sustained, the Fed has to move more aggressively. That has historically often resulted in recession, which would be negative more broadly for the economy, for people's employment, for the county's tax revenue. So I certainly think that is a risk to keep in mind. So just to wrap up here, and happy to answer any questions. As we look out to 2022, inflation and the corresponding rising rates from the Federal Reserve are a risk in the short term, we believe. As I note, it's a short term for fixed income, but over the longer term, you would see that income increase in the portfolio. And we are, from just an overall view of GDP growth, it is expected to be positive for 2022, above 3%. Recession risk, we think, is definitely out there, but on the lower side. So I think I got that done in 10 minutes, Chris, or close to.
Yeah, thank you so much. That's really wonderful.
Let me stop sharing so I can see everybody and see if there's any questions or other comments that anyone else would like to make.
Any questions, comments? Great job. Stacy, would you mind, I don't know if you'd be willing to do this, but to send this out to your presentation out to the group as a whole, because
Sure.
I think it's really a nice summary of where we are today, and if you're willing to let people use it for other purposes.
Absolutely. Some of those charts came from JP Morgan. The sources are all noted. And then NEPC, we're having our big annual offsite next week where we really dive into a lot of this in more detail. So any findings from that, I'll be sure to share with the group.
Wow, that's great. Thank you so much. Do you want to be the treasurer?
Oh no, I think that's in capable hands right now. So
you would take a huge cut in pay. Anyway, so moving on from there. Now we have to, we're readjusting the agenda because primarily to accommodate Mike, because he's got meetings on either end of our meeting today, and his voice is really important in the discussion of adjusting the portfolio investment mix and working with Clearwater. So I thank you to Alec, who then agreed to come early. So we did some last minute shuffling and it worked. So I am going to share my screen. There we go. We'll get that. All right. So we've gotten through the agenda. I might as well make this bigger, huh? Because you guys are seeing my whole desktop now, aren't you?
Yeah, we can see it.
Yeah. Okay. So we've gone through the minutes. Stacy did. We're going to skip over all this. Stacy did a wonderful presentation, and now we're moving on to the recommendations that I have for the investment policy and mix and the way that we're handling reporting for the county. And I do hope that everybody had an opportunity to read this because I think it's fairly succinct, but it gives you a good idea of the benefits. First of all, we'll address the mix. I don't know, I have no sense of the history of whether or not, what the decision was to limit the portfolio size to 27.5 million when the investment policy states 65%, basically. And, I'm sure there's some history there, but it is really hampering my ability to manage the cash flow and Mike's ability to keep the LGP at the maximum, below the maximum amount allowed by state statute. And so there is no flexibility in the management. Now, it could be in the past that there was some concern. I know that, 10 years ago, there was no bond portfolio at all. So it was a big change, a big leap of faith to go into the bond market. But as you can see, when you look at where we are now, we are 62% LGIP. And historically, LGIP is always going to have a lower rate than what we could get for bond market and still maintain good liquidity. So we are currently 62.38. Under the investment policy as it is written, we can change to 35 LGIP to 65% of bonds. And that will greatly increase the amount of income that we can generate off of the income portfolio without taking risks, without, not an aggressive portfolio by any means. We would still, on average, earn, anywhere from 75 to 1 basis point higher. And that's a lot when you look at the overall portfolio. I have the adjusted portfolio ratio there. You will see I have deducted the Clearwater Analytics fee from the potential income increase with just that simple change of adjusting the mix. And it would be estimated income increase of about $136,000 a year. Well, that's a couple of people. That's some projects. I don't know how that would be used, but I know this money is divided up among the departments. And when our interest goes down, other people's budgets become harder to manage. So I would strongly recommend that change. And just as scenarios, I put down there, if we have total investments of 61 million, which is pretty much the average. Right now, we're a little high. We would still have an interest income increase of about 94,000. Now, these are estimates. I actually think they'll be higher because, as Stacy indicated, the bond rates are going up. And I used a rate of 1.25% for the estimate. And I just bought a couple of bonds in the last couple of days that are yielding 1.5. So the interest is going to go up, but this is pretty conservative. It needs to be conservative because I don't want to overpromise. And then in the fall, as we had in the last quarterly report, we were down to 52 million because we hadn't received taxes and we were nearing the end of not the fiscal year, but at least the calendar year. And even with that, and if we're only invested in 33.8 in the portfolio, we still have an increase of income of almost $80,000 to an adjusted average of about $100,000 a year in income that we're not receiving now that we could very easily and very risk-free receive off of our monies. And in a time of, I think you could err and say that it's almost irresponsible for us not to do this, given that we have the responsibility of managing our income safely and keep our investments liquid. And we could do that very easily with the parameters that are set up in the investment policy. So, and here's just a summary of the investment policy where it does say that no more than 65% in our bond portfolio and no less than 35% in LGIP. Well, that's miles away from where we are now. And the next thing that goes with that is one of the things that I'm very uncomfortable with is the fact that there's a lot of potential for, well, you could say that, oh, I see, looks like Mike, you raised your hand.
Oh, yeah, my mic's live here. Just to reiterate what you just said before you move on, is I've always believed it's best that the investment policy manages the money that the county has as a whole. And the fact that, like Chris said, we had sort of broken out and limited the investment. And in my opinion, we've had way more than we needed to in LGIP. And so I think the investments should be looked at all the cash in the county as a whole, not just a limit of like 27.5 million. So I've always been a big fan of looking at our excess cash as a whole versus in two separate buckets. And so this 65% seems to work well for me. I did go back and do some research and said, well, how low does our cash and investments get at 35%? Is that going to be enough in the pool for us to manage our day-to-day operations, especially the months of October and early November before cash comes in? And I thought it was actually still even a little conservative. I think we would still give us, in a worst case, a couple $1 million more than we actually might even need. But that's a lot better than having sometimes, $15 or $20 million more in the pool than we need. So I believe this strategy is sound. I think it's smart for the county to look at our excess cash as a whole and not two separate independent pools. So,
Thanks, Mike. And in case you haven't realized it, Mike and I work very well together, and I most of the time I think of him as my boss because he's the one that manages the day-to-day flow of the county's finances. And if he were to say to me, "Oh, I'm not really happy with something," I would take it very seriously and we would have a discussion. He's never done that, but we're a very good cohesive team. Now, one of the things that you have to think about, though, and which is why I'm bringing Clearwater into the picture, is that Mike might not always be in his position, and I might not always be in my position. And so we have to design a system that works for the unknown people who might be managing the county funds. And currently, when I stepped in as treasurer, I found, as you all know, or most of you know, a lot of difficulties with the lack of transparency, the lack of understandable reporting, and the lack of following the investment policy as written. It was a rather loosely managed portfolio, not to the detriment of the county, but potentially it could have been. And the bottom line is that nobody other than the treasurer knew exactly what was going on with the investments. We were dependent, and I was on the investment committee then, on the reports that we received. And all of you who have been in business or have managed finances, that you can omit things. And so therefore you may not point out the inadequacies of the current situation. And so if you have a reporting system that is completely dependent on one person, which it still is, to present to you as a committee and the county commissioners, the information about the portfolio, you have a certain amount of risk. And so there's a great deal of trust that has to be in place for people to feel good about the investment pool. And I find that disturbing because I could make mistakes. And my reports, the way they are now, are made up of items that I pull from the reports that we get from Zions, which is not, it's not raw data, it is static. And so if I want to get what I need from Zions, I have to actually calculate it myself. Sometimes I have to enter it myself, some data. I can get a special report from them, but it's still ultimately not the way I would like to see it, where one person does not have the capability, the ability to selectively report or to make large errors. And in terms of our investment policy, unless all of you are sitting out there and studying that constantly, you're not going to know necessarily if I violate that policy or my predecessor or the people in the future violate that policy, because it's not really, I mean, you have other lives. You can't sit and study that. So Clearwater, which is, I really like their reporting, eliminates all of those concerns. Currently, with Zions, once again, there's an online site and I can go and I can look at what we have, but it's not updated daily. And it doesn't include any changes in the credit quality of our bonds as they happen. The bond maturity is not broken out into a separate field, so I can't really build a ladder and work with it easily. Callable bonds are not identified in any form. We have, and you'll see when we go through the callable bonds, which we have a maximum in our credit policy that we can only have 35% of our portfolio being callable bonds. Well, we've reached that limit. So depending on what happens in terms of the size of the portfolio, I can't buy any more callable bonds. Well, if we were with Clearwater, I'd be able to see, oh, we reached 35%, so I can't buy that. Or we're down to 30%, so I could buy that. And I could do that daily. And I could create little daily reports as I want them. Well, it's as I think it's an untenable situation, particularly when you have an elected treasurer. Now, it is my hope that I'm the treasurer for the next 12 years. But, who knows? I mean, in 4 years that I could get voted out, or, I could find out that I really don't have the stamina to do it. Who knows what will happen. But I feel it's my responsibility to build a system that works for the future, as well as my personal taste of how things should be done. So we have, I think, in the course of this, I've pretty well explained some of the benefits of Clearwater. I'm not going to go through the whole report. Hopefully you reviewed it. Now, the downside is Clearwater wants to get paid. Someone has to pay Alec and his Summer, who I work with too. Somebody has to pay their salary, and they probably want to make profit, so they do charge. But we're a very, very good product. And if you look at if we had a $40 million portfolio, that's the equivalent to 4 basis points off of our yield. It's a very, very small amount off of our yield. And the benefits that we have and the responsibility that we have outweighs that fee. I think that we have a responsibility to the public to make certain that we don't have the ability or for any one person to make a big mistake or to flaunt the rules, or somebody comes in who doesn't understand anything at all, which can happen. They still have that framework to work with. And in terms of reporting right now, if Mike had to produce a report tomorrow because I wasn't around, he would have to either try and work with my desktop and figure out how I did what I did, or he'd have to create a whole new reporting system. And that's just not okay with me. So I did talk to two other companies, Simpro and Tracker. Their fees range from $5,000 to $10,000 a year, but they do not provide, it's basically what they are is their spreadsheet, online spreadsheets that I have to input manually every transaction that I make. And that defeats the whole purpose of having a service. I don't think we gain anything, and we spend a lot of money. So, and I did talk to Commissioner Sterrett, Larry Soderberg, who's the Chief Financial Officer at Yamhill Community Care. They use Clearwater and they're very happy with it. He really had a lot of positive things to say. And he said that if you wanted to talk to him, feel free to call him because he works with you. Shannon Bell, who's the Jackson County Treasurer. If you read the report, you'll see she just raves about the benefits of working with Clearwater. There just isn't anybody else that provides that. And just so you see here, this is the report that Jackson County gets. She was kind enough to share this with me, and this is their monthly report. And you can see how much it's very succinct. It has more information than I can derive on my own. And it's short. It's clear. It's very well designed. Now, this is their report. Our report can look any way we want it to look. And because this is one that she generated based on what's available through Clearwater. And all she has to do, like we could include, because Clearwater tracks for us, if I input all of the parameters of the investment policy, they have an audit section that will tell us if we violated that, and it stays there until we address it. And even after we address it, it will then include what we did, so that if someone looks at it, they go, oh, well, they know that bond is a lower credit rating than it should be, but they have decided to keep it for this reason. So we could include that, a monthly report of any audit discrepancies that are there. The auditors, of course, would love this. And I'm not real certain that the auditors look very deeply into what the investments are doing, because they're looking at the whole county. So, okay, so before I get totally, I could talk about Clearwater all day. I get so excited about it. Mike, do you have anything to add?
Yeah, I do. Two things real quick here. Of course, we have Zions Bank, which is the third-party safekeeper Chris has been talking about, but that's all they do. They just basically hold our securities and give us some basic reports. They do not provide any analytical work at all. And from my perspective, what we have lacked since I've been here is we do not have any system that amortizes premiums discounts on investments. And so right now, we are not in compliance with the Governmental Accounting Standards Board because we don't have a system to do that. When I first came here, I tried to develop one by hand in Excel. It was just way too much work. I did talk to our auditors. They said from their perspective, it's not material, so they're not going to give us a finding on it and not report a compliance error. However, they would still like us to be able to do those things. And so Clearwater does that for us. And I will say this to what Chris just said, the auditors actually do look at rules that are required through the, I forget what they call it, but they do an Oregon audit of Oregon laws, and they do dig into our investments and look at the percentages. They probably follow your reports, Chris, and then I think they might do a little bit of tracking back to the actual statements from Zions. So they do look at compliance, not to the detail that we do here, but they do look at some compliance, and they find errors on occasion that we are out of compliance with. But But yeah, we've never had a investment tracking system before. That was one of the things I wanted to do way early on, but it's not in my area, obviously. I'm not the treasurer. So I was pretty excited when Chris had this idea to get something more than just Zion's Bank. So we can actually do accounting more accurately. And I think the auditors will absolutely love it as well, because they do a lot of these things outside the system. We have to do fair value accounting in the financial statements. They have to do that themselves because there's no other system to do it in. So this will reduce audit work and some of their compliance efforts as well. So I'm all excited about it.
Thank you. Good. So now that we have pulled Alec out of vacation, does anybody have any questions or in general discussion about everything I've just covered? I would appreciate input from people. Jim.
Hi. Yeah, I like the idea of the reports, the dashboard analytics there look good. They look like what I would expect you to have. So a couple questions is then how do you get the data to Clearwater? Do you input, send them copies of your trades and maturities, or how does that work?
Alec, you want to address that?
Yeah, and I just appreciate everything you guys have said too about Clearwater. Obviously, I'm biased towards it because I'm here, but we continue to try to improve our product too in the government space. So just because we do things well now, we want to continue to do that. But to your question, Jim, what we do on a daily basis is we'll set up a feed with Zion Bank to automatically pull those transactions in every single day. So that way we don't even have our fingers on it, right? But if there is any errors that come through, with Clearwater, you have a client servicing team that works with you. We kind of think of it as an extension of your team. And so if a coupon payment comes through for the wrong amount, not just that it came through, but it was for the wrong amount, your client servicing team would go fix that on your behalf. And if you want to be involved in that scenario, you can be, or you can kind of be hands off. Once you start to use Clearwater, you're like, okay, I trust what's coming through. I feel good with how it's all coming in and it's all validated. So we try to take care of that. So when you log into your computer, 9 o'clock in the morning, whenever you get started, you have accurate investment data in front of you.
Okay, and then at month end or maybe more frequently, you're going to give accounting entries for Mike to book for amortization and accretion.
Yeah, so we'll do that every single day. And so when it does come to month end, because we've been, I guess we call it soft closing the books, because we're doing it every single day. We do a soft close. And then when it comes to month end, we'll have discussions with Chris and Mike, and we'll have a specific lockdown date for the journal entries to go into, so that everything's accurate. Yes. But you should be able to look at that stuff every single day and see adjustments as they come along.
And how is the fee determined? In my experience, it's often based on the number of QSIPs you're monitoring for us, but is there a different method here? Are we at a base fee or?
Yeah, so we have so kind of how it works, you guys are at a minimum of fee of 15,000. And there is a basis point fee that wouldn't kick in until you guys' portfolio grew to roughly over, I believe it'd be 150 million would be give or take right around there. The basis point fee would then kick in of around 0.6 basis points. Yeah.
So is the fee based on the dollar volume then, or the number of bonds in the portfolio?
Yeah, the average market value throughout the month will give you kind of your monthly. But since you guys are at our minimum fee, I think it comes out to $1,250 per month, and so that's what you guys would see every month. And we're I told Chris this, but we're like a monthly subscription like Netflix. We don't have some long-term contract that you're stuck into, right? Where it's month to month. So as long as you give us 30 days, you can always, get out of that contract. But the reason we do that is because we want to, it's important for us to take care, make sure that you guys are getting the value that you got when you first started and then more as you continue on. So we try to make it very simple in that aspect.
Okay. Yeah, I've not seen that in my experience with the bond accounting. We've always, and say keeping, it's usually the number of QSIPs that are monitored, not the dollar volume, but
And I think it might be a little bit different, but we've been doing it just on a basis point fee, and it seems to be working out. Although we've really strongly started working with more and more government entities in the last 2 to 3 years, and we realized, what insurance companies pay versus there is a difference in industries and stuff that you go into.
I had a quick question, Alec. First of all, I would just say I think this makes a lot of sense. I think it's important for Chris and Mike to have good analytics to manage the portfolio, and it takes, some of the liability or risk that could potentially be the county could potentially be exposed to if something went wrong. This could catch that. My question is around cybersecurity. I mean, one of the things that we look at as we work with different custodians and we have feeds into our performance system is just the integrity of data protection. And so if you could comment on that.
Yeah, we have a lot of, and so I'm not going to be as amped on this side of the things of our security, but I know we have a really strong security setup for anything that's coming in SOC 1, SOC 2 reports. But it might be helpful maybe to have, if you had some sort of questionnaire or something like that, we could help send over that kind of answers some of these specific security questions. I'm just not going to go on the details, but I know we put a lot behind it to make sure, because it's your data. It's extremely important that it's protected and not, not everybody's viewing it. And so we do take a lot of pride in that and making sure our security system is very strong. I just don't know quite all the details, but I can definitely find something to send out to the group, maybe pass it along to you, Chris, that goes into some of the detail of how we're not only staying compliant with security policies, but also going above and beyond that to make sure, the security is well protected. Because that is, definitely, as you think about the cloud and SaaS, that's kind of the world you're starting to get into of like, hey, this is my data. I want to make sure it's protected. Clearwater, what are you doing to ensure that? So I can find something that is a little bit more articulate than what I just said that can give the details of like, okay, of the specifics that I think would be helpful.
Yeah,
Oh, go ahead.
Oh, I was just going to say, I mean, I would defer to Chris on that, but I think if there was just some security policy that you have that you could share for them, that would be helpful.
Absolutely.
Okay. The other thing I wanted to mention is that currently Zions is, as Mike mentioned, Zions is only a safekeeping agent, and we're required by state law to have a safekeeping agent, even though we didn't have one when I first came. As such, Zion primary job is to make certain that our securities are held safely and that transactions are done correctly. And once again, is another safekeeping to make certain that, all the transactions that are happening are done according to Hoyle, if you will. And they do a good job of that. But the one thing that they did do, when they were transferring over our bonds, somebody manually, and this won't happen again, but manually input an interest rate on one of our bonds. And so according to them, we were earning $100,000 a year in interest off of a $200,000 bond. It's a pretty good deal. But so I noticed that, fortunately, and I asked them about it, and they took a while, but they corrected it. So what I asked Summer, who is not here today, is what would have happened if we had been dealing with you at that time? And she said that Clearwater would have caught that, because Clearwater functions off of the QSIPs, which is the number assigned to each bond. And so it has to verify with them what the status of that bond is. And so that's another backup. Now, I don't think that Zion's making a lot of mistakes, but it is comforting to know that there is a second look at everything that we do, and then a third look by us. And so, and I think as working with public funds, we have a huge responsibility to the public and are very vulnerable if we cannot say that we do that. I think that's one of the key things that I'm looking at. Any other discussion, questions, opinions? Bill?
Hi, thank you. Alec, could I just confirm, so what you're providing is information access, not transactional access. So in terms of, is that correct?
We give you all your investment. So any transactional data that happens with your investment data.
Right. We're not actually processing transactions through Clearwater though, right? That we continue to process in the normal function.
Yep.
And that's sort of a, just to clarify, so in terms of the data security risk, what we're talking about is the risk of our information either becoming publicly available, which it already is, or being tampered with. Is that correct? So we don't have any real financial risk with regard to a data security issue with Clearwater.
Right. Yeah. And when we do it, so since we have that connection with Science Bank too, any of that, because any of that transactional data that comes over on a daily basis, our team's looking at that if it needs to, right? Most of it's automated, but there's still some red flags that come through. And so that's when we would find the error and come back to you. Like you said, yeah, it's all about investment data though.
Mary. Oh, sorry. Mary, you have a question.
Thanks, Chris. Yeah, I just wanted to just sort of ask our administrator, Ken Huffer, to weigh in on the budgetary impact of this, just maybe your initial reactions to it and where it fits in and how it plays out initially.
Are we talking about the recommendation number one as far as the changing of of the investment portfolio and less about the contract?
Well, I'm interested in the contract, and also I just wanted sort of you to give us either your blessing or your concerns about the portfolio changes. I know this has been an issue for years. Just wanted to hear from you.
Well, I think from the big question, that I would have, and again, coming with the disclaimer, when I'm talking about the first recommendation about going from the flat to the percentage based on the portfolio and how that looks at, again, I think I'm looking at it from a lens from an annual operating budget and ensuring, because we do adopt an annual budget, go through a lengthy process. And a lot of things can change depending on what the board prioritizes, so we may have, we could potentially see an impact year to year on what we have for reserves and spending because that gets updated. So I think it looks fine. I'm comfortable with making the changes, but ensuring that the liquidity or making sure that we still have access to those funds, that should there be a shift, like a major capital project, a major insurance claim, a new collective bargaining agreement that may see an escalation in payroll costs or some of those uncertainties that could happen during a fiscal year or at a future fiscal year, is making sure that we still have adequate access to resources to make sure the county can continue to operate and service delivery. But otherwise, just looking at it, we have the investment policy in place, and it seems I don't have the history on the 27, the limit that was established that predates my time in administration, but I do think it aligns with what Chris was saying, as far as this was new and this was a new direction as far as having these investments. And so it was, testing the water. So I know incrementally, Mike Green would come in the past and make requests to increase that cap, and it's, so it makes sense to me, and I'm supportive of the change. And we'll just continue to monitor and see if there's an impact and continue to have those discussions with the treasurer and Mike and I and make sure that it's working and we still have the funds available to continue to operate. I don't think I have a lot of, as far as on the second item, as far, we'll have to look at, the actual paying for the contract, how, which budget that's, how that's going to be applied. I think that's something that we can get figured out. The only thing that I would, I like data and analysis, and so I'm always supportive that the more data that we have and analysis and transparency with what's happening with that, I'm, a huge proponent for that. And the only question that came to mind when I was looking at this is, it's kind of taken a couple steps backwards, is making sure that looking at our procurement processes and our purchasing ordinance, because we need to look at, with this type of service agreement, what's applicable on as far as our procurement process, make sure it's compliant with that. And that may just require, I know Mike and I were speaking briefly about it. And we may need to, because I think a lot of the questions that were being asked about the security and about the service itself, a lot of that's going to be spelled out in a contract agreement, which we'll need to get county council to also weigh in on that as well. But just kind of taking a step back, I think we need to take a look and make sure that that the solicitation or how we were getting quotes is compliant with our procurement policy as well. So and on that, I just said a lot, and I'll quit rambling and answer specific questions.
So thank you for that, Ken. I just wanted to ask Chris about the, would this be something that we would just initially looking at this need to do an RFQ for other quotes?
I don't know.
That's a Ken question.
Oh, you said you had.
No, I'm just, anyway, sorry. Didn't mean to interrupt.
All right.
Go ahead.
I was gonna say I don't know about that.
For these types of, again, I'm running through the contracting ordinance right now to try to see if there's some exemptions for this type of service or not built into our ordinance. It could take the form, it could just be as simple as based on the dollar value. It could just be a request for 3 quotes, or I don't know if this is going to necessarily trigger an RFP process, or, again, I think just, I have some questions and I want to make sure that we're compliant with the procurement process, and that could just be a 5-minute conversation with the county council's office as well, and just a review of the ordinance.
Yeah. The one, I'm sorry, just one thing, and then Lindsay, the normal way, Commissioner Bershauer, I am so sorry. Anyway, the normal way that other counties or organizations do it is they deduct the fee for Clearwater from the interest. So it is not a separate line item. It is an interest expense. And so it doesn't show up, like it wouldn't show up in my budget. It wouldn't show up in Mike's budget. It only shows up as a deduction to interest, because that is, in fact, it's a cost of generating that interest. Just to go Mike Green on you a little bit here. If you started deducting the $15,000 from my budget, then it would make sense to have the interest in my budget, which of course it doesn't. But you can't. So that's why the 15,000 needs to come from the source, which is the interest. And Mike.
And I would agree with that. That would be the approach. That it wouldn't necessarily be a line item in the budget.
Right.
So.
Right. Okay. And Commissioner Bershauer, you had a question or comment.
Thank you, Chris. So if I'm understanding on the first recommendation, is Mike still on? Oh, shoot, we lost Mike.
Oh, yeah. He had a meeting he had to go to.
Okay. So maybe I guess my understanding from him is that, and Ken, you can weigh in too, but he thinks that the recommendation number 1 is fine because we would still have, $3-4 million, $5 million at play if we needed to, versus having a much higher amount, but we don't ever sort of bump up against that. Is that kind of his understanding?
That I believe so. I believe that's what.
Okay.
If
So
I can answer that, the lowest in any kind of normal times that the LGIP would go would be about 16 million. The county spends about $5 million a month, but gets income at the same time. So there would be ample reserve. And in addition to that, at least 3 to 4 million and probably more matures every year. So we always have bonds maturing. We just had 500,000 mature, 500 million mature in the last 2 weeks. And so we have an ongoing opportunity to make a decision about, oh, well, we probably shouldn't invest that now, and to keep that in LGIP. The other thing I should note is there's absolutely no intention of pushing this to the max, to the full 65% on a monthly basis. It is primarily to one of the drawbacks we have right now is that we have $10 million of ARPA funds that counts against us in our LGIP holdings. And is it May, Ken? I think we're getting another 10 million, and we're going to be really up against the wall. So we have no place to put the county money. At this point, we'd have to move it into the checking account, which of course would earn nothing. And so our flexibility is just not there. And that's what we're looking at. And as I stressed, we're a team. Mike and I can work on this just fine. Go ahead.
The one quick update that I would share is we do have an agenda item on the formal session for tomorrow for one of the large grant programs, which will essentially obligate 6.8 million of the current 10 million that's in our ARPA funds. So there's a chance that we could be writing checks for $6.8 million here in the coming weeks. So, that's a good example that we'll see some of that getting spent pretty quickly.
Yeah, it's cash flow management is what it is. And none of this money is really ours. It's money that's coming through grants and that is not being spent immediately. And it ends up averaging out to a certain amount of funds that we're holding that, people think the county has all this money. Well, we don't. And so mindful of that, we need to make certain that we're making the best we can out of those funds so that the county does get some money off of the holdings of that money while we have it. Anyway, does that answer your question, Commissioner?
Yes. So it sounds like there's consensus that recommendation number 1 is good strategy, and we should go forward there.
Yeah.
So for the second one, so you've been into this a year, and we've had several of these meetings. So how has that data been pulled historically in the past year? Is that something that you have been able to access from Zion or other investments and sort of pool it together and produce a summary yourself? So, because I know we've been seeing those, so.
Yeah, it is, and I can continue to do that. What we're not getting is, and it becomes more problematic as the portfolio increases, is we're not getting, like I have to, let's say for the quality of the portfolio, I have to actually get a data run from Zion's, which they're not real happy about giving me because it's extra work for them, and it's not really what they're there for. I have to do that, and then I have to go through every security, look at what their rating is, and assign like a quantitative number to each of those values and then average it all out in order to get the credit average for a portfolio. They don't calculate that for me. They actually also don't report it in a way that, so it's that kind of thing happens in terms of maturity. If I want to know, like if I want to know the maturity of the bonds, they don't have, the way they list them online is they list them in the name of the security is the maturity date. It's not a separate item. So once again, I have to go to them and I said, can you please give me this? And then it will be only for that date. And then I can use a spreadsheet and I can do all this, manipulation so that I get it, so that I know what the security of each one is. And then, and that's how I can build a ladder, which is a ladder being making certain that we don't have gaps in our maturities. So the intention of having a ladder, and what I would like to be able to do is, let's say we had a $36 billion portfolio. I would like to have our maturities so that we have $1 million mature each month. So that eliminates the cash flow question that you asked earlier, which is important. And it also makes it so that we are averaging what the rates of return are based on buying in the current market, so that we are continually rolling into the market and the interest rates and the changes. Now, I can't do that. It can be accurate, but it's always going to be lagging because it's downloaded. Whereas if I'm with Clearwater, I can look at that every day. Every day I can go on, I can look at a ladder report, and it also would include the interest that I'm going to earn each month on Clearwater. So in other words, if we have a bond that's $500,000 bond, not only do I know the maturity, but I can look at that portfolio and say, we're getting this much in interest each month. And that's automatically generated. I have no way of getting that. So this is not, I mean, it depends on how you look at the treasurer's job. I view it as a cash flow manager, a portfolio manager, and not just a keeper of the bonds. And we need strategy. We need, and I can do that in my head, but it's not as workable. And I think, and I'm going to put Jim on the spot here, but I think Jim, because they're managing a big bond portfolio for Washington Federal, not Washington Federal, yeah, whatever it is, First Federal, and I'm sure they have a ladder process. Jim, can you address that?
Sure. So yes, we have a bond portfolio between, I guess, over the last 35 years, I've been either the accountant for the bonds or the portfolio manager at 3 or 4 different banks and credit unions. But yeah, we manage a ladder. We layer in other cash flowing instruments like CMOs and mortgage-backed securities and whatnot. But the whole idea is creating series and series of cash flows that reprice every month. And it takes the guesswork out. Not that we're not opportunistic. When rates move in our favor, we'll buy more frequently. But yeah, I think you absolutely have to have good reporting. We don't, sorry, Alec, you're still on the call, but we don't pay for that reporting. One of our broker dealers provides the analytics. They get a feed from our safekeeping agent, which is a Federal Home Loan Bank. So there's different ways to do it. One of the things, like I said in past, and I'd always ask Mike about the size of his purchases, because we've always paid by QSIP for safekeeping. And so at some point, managing those blocks, those purchases to larger dollar amounts and limiting the number of bonds you're actually accounting for, it's going to make it easier on you. If you want $1 million in maturity a month, maybe buy, $1 million blocks of bonds or $500,000 and limit the amount of accounting that you're actually doing. So did I answer your question?
Commissioner Bershower?
I think you raised more questions, but that's okay. We don't have to necessarily solve it tonight, this morning. But I agree. I think Stacy mentioned security. I think that was on my mind too. not just cybersecurity, but also having kind of some parameters and rules around users of who would have access to that type of technology. And then Commissioner Sterrett brought up the RFQ process or potentially RFP process. So there's some questions I think we need to get answered, but certainly worth considering for the second proposal.
Okay, good. Yeah, I didn't think that would just fly through today. I can dream, but no, we need to make certain when we make a decision like this that we did, dotted all the I's and crossed all the T's. And I'm sure that Clearwater has done this before.
Yeah, and I can help a little bit too, like with users and limited users. So we don't charge for the amount of users that have access to Clearwater for, whoever in your organization, Yamhill County needs access, can have access to the data. But then within that, you can have restrictions to, who can have access to what reports, because not everybody needs to see all the data, but maybe for everyone that's on this committee, they want to, Chris wants you to all be able to see this, so you can log in yourselves and take a look at that information on a daily basis. If you have auditors come in, you can say, we know you want to see these reports, we'll give you access to these reports. They can go in, and they really like that too, because then they know you're not messing around with the data that you've given them. They get to go mess with it, hands-on and see what's going on. But yes, we've been through the procurement process. The security questions you guys have are very valid, and so we can definitely have a more in-depth document we could send over to everybody that really dives into the detail of the security of, because we take that very seriously, of course, to kind of help answer some of those questions.
Well, and looking at the clock, and we haven't gone over our latest report, I would like to recommend that we adopt to send to the commissioners, of course, recommend to the commissioners that we adopt the portfolio mix as per stated in the investment policy, so that we can start earning more income now. So if somebody feels comfortable in making a motion to do that, I would welcome that.
So moved.
Who did that?
Second.
Okay. All in favor?
Aye.
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 Opposed? I know you want to vote, Mary. I'm so sorry, Commissioner, you can't vote. This is so frustrating because you're here and you have, but you can ask questions. You'll get your chance to vote when it comes before you. So, okay, so we will move that on to the commissioners. In terms of the proposal for the adoption of Clearwater, and let me know if I'm not correct on this. We want to make certain about the process of the whatever the adoption of a contract is for the county, and we'll talk to we'll get a sample of the contract that we can have our in-house attorney look at. We will get more information about the security of this system, and what else would people like to see? Anything else? And then we can discuss this at the next quarterly meeting. There's absolutely no reason that we need to rush this through, other than the fact that I'm really looking forward to having access to all that data to play with it. Ken.
I was just going to suggest that if there's interest, because also knowing the meeting frequency of this panel, and you're essentially making a recommendation to approve something, that you could, in the interest of keeping this moving forward, because I think the procurement questions and the contract and things like that should be a fairly quick turnaround as far as getting that confirmation. That if there's interest in not waiting until the next meeting, I think it would still be okay to prepare, or if this committee wanted to do a recommendation to proceed down this path, and then that would allow you would have the recommendation. We go through our quick review process, ensure compliance with procurement rules, and getting a contract ready that then you could present to the board at that time. But what I'd probably recommend that any motion on that, it wouldn't be, specifically to Clearwater as a vendor, it would be, a more of a general recommendation on this type of a software solution in moving forward. If that makes sense, it's just an interest in if you want to really keep this moving forward. And if there is interest with this committee in making that recommendation, we can go through the other processes to prepare the contracts and the recommendation for the board.
Thank you, Ken. I appreciate that. And Jim, you have your hand up.
Yeah, I would just also request that if whether it's Clearwater or another firm that they would provide a statement of controls audit of SOC 1, so that we know that the accounting that we're relying on is accurate and we're not going to follow it down the wrong path. So.
Okay, thank you, Jim. I appreciate that input. So, so thank you, Ken. I appreciate that. So, could someone make what would be a recommendation or a move that we adopt or at least recommend to the county a software system that will allow us to have daily access and clear reporting for our investment bond account after having gone through appropriate compliance and contract review. Now, you could just say, yeah, I want what Chris said as your, so does anybody feel comfortable doing that?
So Chris, what does this come back to? I mean, when Ken was originally articulating this motion, I thought where he was leading was a motion to propose Clearwater, providing they satisfied the safety and whatever else questions available. Now it sounds like we're just generally proposing a request for proposal of a software system like Clearwater, and then with to move this to the county commissioners, assuming the same conditions are met. Is that right, or have I misunderstood?
I think that, Ken, is that right?
Well, I was saying because as part of any procurement process, we have to solicit quotes, and we can't make a determination on the vendor until we go through that open procurement process, depending on what we're rolling out. Is actually, I would generalize any recommendation or motion, and then if it's Clearwater, if we go through a process and it's Clearwater, then they can proceed with that contract and agreement to the Board of Commissioners to approve that. Just in case, we have to kind of take one step back, because again, it's supposed to be a procurement process. So I don't think we could do a recommendation or a motion for Clearwater when we may still have to do a request for quotes, or at least get 2 more quotes from 2 other vendors.
Which I can do easily because I have 2 other vendors. So because, we have, we're a public entity and we have these kinds of restrictions about procurement. Bill, I would love to do the first one where you just say, okay, let's do Clearwater. But we need to make certain that we do the right thing procedurally. So what you stated, the second half of that sounds like a great recommendation. So would you like to propose that?
At the risk of throwing a wrench in the works, I have another question. So,
okay, no, that's good.
Is this whole process likely to occur prior to the next meeting of
Yes.
this committee?
Hopefully, yes.
Okay, so then the recommendation at that point, let's assume it's not Clearwater at that point, then the recommendation at that point would be done without feedback from this committee?
Yeah. Now, what we can do if the committee wants to do that is we can have another meeting in a month, and which, there's nothing to say we can't do that. And after we have gone through the extra hoops, we can come back and say, this is what we have found, and this is what we recommend that the committee do, and then we can talk about it then. But that would entail another meeting, because if the way things kind of progress. I mean, the commissioners have a once a week meeting, so they could defer something and it's not a big lag. But if we get to the next quarterly meeting and there's still questions, then we go to the next quarterly meeting. So it would entail a special meeting. And so, and I don't know how people feel about that, but otherwise, I personally would prefer to say that that we recommend Clearwater, because I have done the research, but I can put that together, or we can have them. But we recommend Clearwater unless we find another organization that can provide everything that Clearwater can provide at a lower cost. That's what I would do.
I'm assuming a recommendation by this committee is not required for you to move forward. So I don't want to, stop everything on that basis, but I just wanted to clarify that.
Well, I think that, and commissioners, you can answer this. I think that for the commissioners, a recommendation from this committee is important. I think that gives them some support in their decision as well. So that doesn't look like, we're just pushing this through without considering the opinions of all of the people who are knowledgeable about this subject.
Well,
is that right, Ken?
I would leave it, probably to the commissioners here to share their thoughts on that as far as the recommendation. And I would say, again, the suggestion that I had was if there was interest, because we have a couple boxes that we need to check process wise, and so that was just one possible option. But if there's concerns that the committee would like to see the proposals before making a recommendation on it, I think your other option that you could schedule a special meeting on that one topic, to prepare a recommendation to submit to the board, or you could wait. Again, I was just trying to help out a little bit with some process items, and I realized that this probably generated more questions than answers. So I think it's up to the committee on how you'd like to proceed.
Okay. Anybody have any, someone like to make a motion?
Chris, I just have a quick question.
Yes.
Is anyone on the committee have any sort of association with Clearwater? I was thinking Kevin, but then you're Headwater, so I got the two mixed up.
Oh yeah, the water people. Yeah. Anyone?
I do
Okay.
not.
We
sure.
may have, NEPC does a lot of public fund work, as well as we work with a lot of different money managers. So I suspect that we have folks in our universe that are using Clearwater, but I can, Commissioner Bershauer, I can do a little digging on that and send some information to Chris. Maybe Alec even knows if any, I don't know if you're familiar at all with NEPC, but you may know. No. Okay.
Alec, where is Clearwater? Is it local within the county?
No, it's not within the county. It's out of Boise, Idaho. So not too far.
Okay. I guess my feeling would be to err on the side of doing an RFQ or an RFP, just so that we don't have, the appearance of picking somebody without having a fair process. We go through this with a lot of things, but being able to have local folks bid on this type of work as well, it's not super complicated. But that would be my instinct, would just to have sort of a general recommendation come from this committee to us saying, we're really interested in moving this to more of a compact process for Chris to do her work. But we want to move forward with an RFP or an RFQ. That would be my preference.
So with that scenario, would the RFP be enough for us to bring it to the commissioners without another meeting of the committee if everyone here agreed that that they wanted to do this? Would that be sufficient?
I wouldn't want to vote on picking somebody without your input though. So my preference would be if we have a list of people, we bring that back, or you guys would be able to look at that in your next meeting and come up with, we really can't work with these people, that won't work, or, this is our these are our top two choices. That would be my preference. I know it's a little bit longer on the timeline, but I don't know that I would feel comfortable voting on just picking somebody for you.
Okay, all right. So just so we can move on here, if we could just have a recommendation from the committee to proceed in the selection of a software provider that can help us manage our investments with the right data. Can we do that?
I'd make that motion.
Thank you.
Second.
All in favor?
Aye.
Aye.
Lindsay, Commissioner? Are you opposed or?
I'm going to abstain just because I'll be voting separately.
Okay, so all opposed? All right, so we can move on. And Alec, you can go continue your vacation. Enjoy it.
Hey, thanks everyone. It was nice meeting you all.
Thank you.
Thank you.
Bye.
Okay.
Chris, before you move on, my apologies, but I do have to drop it as well. I have another
right.
meeting scheduled at
Yeah, it's
10:30.
Yeah. And this meeting was scheduled for 10:30. So we'll just whip through the
Thank you
report
all.
to end
Take
at
care.
10:30. All right. Thanks, Stacy. Okay, so we will very quickly go through. And there aren't any surprises, so it shouldn't be, it's pretty basic this month. Oops, let's get up to here. Okay, so what we have here is we've talked about rate trends. We don't need to spend any time on that. Earning trends, I think is kind of important to look at how low the interest has gotten, just to back up the recommendation that we changed the mix. The mix is pretty much the same. There's nothing here. You all have a copy of this. If you have questions, you can go through that with me separately. We are still earning 1.31%, but that will probably decline as the higher interest rate bonds mature. And our portfolio value, as Stacy explained, is probably going to go down in terms of market value, but we hold these to maturity, we'll be fine. But you see our unrealized gain, which used to hang in around 300,000, is now only down to 34,000. That's going to change. I think next quarter you'll see that's a negative number, but it's not a loss. Maturity constraints. This is one of those things that kind of drives me crazy when I try to do, but I won't get into that. But we're 63% of our portfolio now is totally liquid, which we will be changing, and hopefully. And then this is the callable bond report. We have, as I said, 35% of the bond portfolio is callable, and that is our max. It's hard to see that from this report, but that's what we get. And we did buy a lot of bonds in this last period. We tended to concentrate on US Treasuries. We bought some mutual funds. They're the ones that are down below 1%, we paid a discount on, so that the interest earned is actually closer to 1% on those. Then the next page is the ones that were either matured, called, or sold. And the Oracle, which has been kind of a problem for us, has they called 2 of their bonds. On our credit watch list, we still have Oracle, but both of those bonds are maturing in 22. And the one Wells Fargo bond that we have on our watch list is also maturing in 22. So hopefully the next quarterly report, we will not have any bonds on the credit watch list. I went through that very fast. Any questions? You all have a copy of this. But if that looks clear, I can, in answer to Lindsay, Commissioner Bershauer's question, I can reproduce these reports quarterly without going to Clearwater. However, and accurate, there's, as far as I know, they're totally accurate. So, but some of this information is hard to extract. And I think we need more information in order to properly monitor the portfolio. It just depends on how important it is to the county to manage our portfolio in a manner that is consistent with the financial community. And, so that is it. Any comments, questions about the meeting in general? Any concerns?
Good
I
meeting.
think, go ahead, Mr. Sweat.
Oh, I just said good meeting.
Thank you. Thank you. Yeah. Well, thank you for being here, all of you, and all the input and questions that are important for us. And Ken, as the keeper of the process, I appreciate your input to make certain we do what we're supposed to do as well. So, okay, we will see you all on April 13th at 9 a.m. virtually. Yeah,
Awesome.
thank you.
Thank you so much.
Thank you.
Bye.
Thank you. Bye.